Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mention and other fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through the upside down, the topsy-turvy world we find ourselves in, hoping to get into a greener future where we're healthier, wealthier, and wiser on the other end. A lot going on today, particularly in the markets. Of course, there's the jobs report, so we'll take a peek at that real quick, see what that's looking like. As you know, I expect a million plus newly unemployed, but we'll see what those numbers actually come in. We're going to look at the S&P and how it's been surging. The $300 unemployment benefit boost that Trump signed into existence through executive order, as well as budget deficits and how long this actual recovery might be taking. Some truthiness starting to come through, I think. So let's take a look at that, shall we? S&P surges above record closing high. The S&P 500 has pushed above its previous record closing high, 3386.15 on the 19th of February. You can have a look here, see where it's at. This is the S&P, as you can see. And this is just recently. Looks like it's a daily chart. And then this fellow is saying because of the fundamentals, of course, he's been a bit silly. You can see the huge gap here. This is the S&P consensus 12-month forward earnings per share, currently sitting around, I guess, $150 or so. You can see how historically it's gone in tandem pretty much with the actual results of the S&P, except for the end of September when things started to get out of hand. Arguably now they're even more out of hand. I mean, really, this should be down here, right? The S&P 500 has got, well, that's almost a 80%, or at least a 50-60% haircut. That's what it should be representing. We'll see what happens. Anyway, here's why. You can see the global liquidity proxy is running in tandem now. So the Fed's basically in the central banks throwing money, stimulating the zombified stock market to look like it's doing well. Of course, we'll see what happens in the long term. And then, of course, this is how the Dow has been then and now. Then, of course, being the 1920s, late 20s into the 30s. And you can see you can kind of fit this chart of how we've done over. Of course, you can see the first drawdown here back in March was way more than what happened in the late 1929, of course. And then it bounced back up. And of course, we bounced back up even more. Perhaps that's because we went down so much. But I would expect this to continue down at some point. I think that's what we're in for, folks. When that's going to start happening, who knows? Perhaps by the end of the year. Or maybe it'll take into the new year. We'll see what happens here. But interesting nonetheless. Trump's $300 unemployment benefit may take more than a month to arrive if it comes at all. And of course, we heard about this over the weekend. Trump signed these executive orders, but it might not be rolled out as easily and quickly as we would have thought or hoped for. President Donald Trump issued an executive order on Saturday to give $300 boost to weekly unemployment benefits. White House economic advisor Larry Kudlow said it would take about 2 weeks for Americans to receive that money. Labor experts say it will be longer, perhaps more than a month. Some state officials have signaled apprehension toward offering the benefit altogether. Now, of course, here we are on Thursday, and we're almost a week into it, so I don't see it coming out by the end of next week, which he would say take about 2 weeks. So there you have it. Americans will likely wait longer, perhaps more than a month, for that money to arrive, as it would require states to tweak their unemployment systems to handle what amounts to a new benefit. States may have challenges building out their systems to accommodate the benefit. Some may decide to offer it at all. And of course, some states just don't have the bandwidth. They're not getting help from the federal government for loans and stimulus themselves. So their tax revenues are down. So how are they going to come up with this extra money? They don't have the printer that the Fed has, so they can't just go brrr, make money out of thin air. So this is going to be another disaster, as has been most things under this COVID pandemic and how it's been mismanaged and mishandled. Meanwhile, more than 30 million Americans are collecting unemployment benefits, according to the Labor Department. More than 1 million people apply for aid each week. The 20th straight week claims have exceeded that figure. We'll see what, I guess, this 21st week has to show. A loan program supporting jobs at small businesses ended on Saturday, meaning more layoffs could be coming. In addition, millions of renters and homeowners around the country recently lost state and federal eviction protections. So if this week here, with the new unemployment claims, comes out at a better than expected number, I think we're going to see next week's be perhaps potentially worse, certainly higher than this week because of this loan program that's ended. So now these companies can fire people willy-nilly, and they probably will, because I certainly haven't seen this V-shaped recovery. Here you can see the continuing claims for unemployment. This is the pandemic unemployment assistance in the light blue. And then those are the state benefits in the dark blue. You can see it's just atrocious numbers. 30 million people still getting some sort of unemployment of some kind. The loss of the $600 a week unemployment subsidy enacted by the CARES Act leaves some with as little as just $5 or $10 a week in jobless benefits from the state. So that's a little bit misleading, because I'm sure that's not the only money they're getting. They're probably getting federal unemployment benefits to some degree, just not the unemployment subsidy. And what happened was this Trump's bill was that the feds were going to kick in $300 and expecting $100 from the state. Of course, some states are in no position to be paying that kind of money out. Here's the unemployment benefits with and without additional relief. So this is the average weekly unemployment benefits by state, along with what a person would get from President Trump's executive order, which was an extra $400 a week, and what they received from the CARES Act, the $600. So this is with the $600 top-up. This is with the $300 top-up. This is the average weekly benefit. I was furloughed myself recently in March for about a month there. It was supposed to be permanent, and then our government here in Canada came up with a PPP program, basically helping wage subsidy for employers, so they were able to bring me on back at 75%. And at that point, my wife and I did some numbers, and we were able to live, pay the bills frugally, and get by on around $2,000 a month. That's Canadian pesos. So about, I think, 1,700 or so American dollars, which means that any of these numbers here in the dark blue, my wife and I could have got by on unemployment insurance. So I don't think these are terrible numbers. These numbers, of course, are challenging. If you're just getting the average weekly benefit, let's say at about $300, that's only, $1,200 a month, roughly $1,200 to $1,500, depending on the month. That definitely would be a struggle for most of us, and certainly families. But with these dark blue numbers, I think most folks can sort of mostly get by, I would think, if they've been frugal and they've been living sensibly. But of course, part of the problem is that the American consumer has not been. They're up to debt in the eyeballs, so they have huge obligations, and of course, so this is going to be felt in the pocketbook, certainly. Additionally, what I didn't know here is that Trump also placed caveats on the receipt of the $300 federal boost. So, for example, people currently getting less than $100 a week in state benefits won't be eligible for the federal subsidy. But I should say that this is the unemployment benefits. Okay, so this is the average unemployment benefit by state. So maybe this was the average weekly benefit, but I wonder if there was additional money from the federal unemployment benefits during this time as well. I have no idea, regardless. These are challenging numbers to live off if that is the maximum you were getting before. And so here, if you didn't get $100 a week or more in state benefits, you're not eligible for this federal subsidy. So that's a bit of a debacle too. Here's the new claims for unemployment benefits. So this is the PUA, Pandemic Unemployment Assistance benefits, I guess, and the state benefits. So we'll see what they look like soon. Governors in states like California, Delaware, Florida, Kentucky, Mississippi, New Jersey, and New York have signaled apprehension toward the benefit. So there you have it, folks. The things are continuing to be challenging, certainly, out there. I think we certainly perhaps are in the trough to some degree. The stock market is not suggesting that. But I think there could be another bit of a decline coming here towards the end of this year. Now that all of these stimulus programs start to roll out, I think we're going to start seeing a little bit more of a pinch, a little bit more pain coming. Interesting breaking news just came up. Stocks slide as S&P 500 struggles to reach its all-time high. That's interesting. I mean, the S&P 500 could reach its all-time high. In fact, could exceed it before it goes down again. Who knows? There's nothing realistic or sensible about this stock market anymore. Let's take a look if we can see here at the unemployment claims. U.S. weekly jobless claims fall to 963,000, the first time below 1 million since March. Okay, that's is good news, because as you know, I thought it would be at least 1 million. So perhaps that is good news. We'll take a look at the numbers at another time. But anyway, there you have it, folks. We'll see what next week's going to be. I think next week, or perhaps certainly the week after, once this employee payment protection plan or whatever it was rolls off, which it did on Saturday, it might take a couple of weeks or so for businesses to start having to let folks go now that the money is no longer there. So we'll see what happens. I think these next few weeks are going to be quite telling, quite challenging. Budget deficit hits a record as US spends 100% more than it collects year to date. Those who have been following the record surge in US public debt, excluding the roughly 100 trillion in off-balance sheet obligations, which exploded by 3 trillion in the 3 months following the COVID shutdowns, and which hit an all-time high of 26.547 recently, will be all too aware that the US budget deficit this year and every year after will be staggering. Here you can see it's been a huge bump up, way bigger than back in the financial crisis. Here's just a small blip, really. The Treasury announced that in July, the US burned through another 63 billion, which was, however, a major improvement after the record 862 billion deficit recorded in June. In July, government outlays were 626.5 billion, an increase of 68.8% year on year. And here you can see that the federal government spending in billions is just it's just off the charts. It goes up and goes down, goes up, goes down. But this is generally increasing all the time because, of course, we're living in a fiat bubble at the moment where the only way to get ahead currently is through the Fed stimulus. And this is a bubble of all bubbles that's going to explode and cause tremendous pain. In fact, it's going to set up the Great Reset, as you probably know, and their central bankers and the governments are counting on that, and most likely that's coming down the pike here probably this decade. On a year-to-date basis, 10 months into the 2020 fiscal year, the US had spent about 5.631 trillion and collected just 2.824 trillion. Imagine spending double what you earned at your salary. See how well that would go and how long it would go well for, right? In the first 10 months of fiscal, the US budget deficit is a record 2.807 trillion compared to just 866.8 billion in 2019. Higher than at any other time in US history, and unfortunately due to helicopter money, it is unlikely that the exploding deficit will ever shrink again until the money system is overhauled or collapses. And I'll say amen to that. I think that's exactly what's happening here, and perhaps at this point, maybe that's exactly what they wanted to happen. And when I say they, I'm talking about the federales and the banksters, right? Top Fed officials suggest U.S. economic recovery may be losing steam. Fed's Rosengren warns U.S. economic rebound could be stalling amid COVID-19 spike. You think, Sherlock? So it says here, Rosengren raised fresh doubts about the viability of a full economic rebound and said the virus will continue to dictate the speed of the nation's turnaround, a sentiment that has been echoed by Jerome Powell, the chairman of the U.S. Central Bank. I mean, of course, this is not new, but now they're starting to actually see what's really happening here. The U.S. job market recovery appears to be plateauing, as we know. July report showing only a gain of 1.8 million new positions, and they're not really new. I doubt most of these were new. In fact, probably most of these, 80% or plus, were jobs that folks went back to that they had been furloughed off of, right? Anyway, there you have it. Now we're starting to see some truth about this. And I think this is all part of the process of setting us up for the great reset that's coming. I mean, if I was to be thinking cynically about it, that's what I think. So there you have it, folks. Things are not looking good yet. We're still not making full recovery. In fact, I think there's a little bit more pain coming in the next several weeks as all these stimulus payment programs and that roll out and roll off, I should say. So we'll see what happens. Unless the Congress can get together and start actually helping the man on the street, we're going to be in for more pain, I think, surely, before it gets better. Let's take a look at the markets generally. Okay, so here we have the market summary. You can see Nasdaq, of course, is just in a bubble, and that'll probably pop the hardest when all of this comes to an end, which will happen eventually, even if it's not within the next 5 years. We'll see. As you know, I'm no longer in the market. I'm just sitting in cash. I just can't make sense of this at all. Can't find real value. There might be pockets of value in some of the stocks, but I'm not willing to go fishing in the small slimy pool where the kids have been pissing, frankly. So I'm just going to wait until the whole market takes a dive before looking for anything of value. So in the meantime, I'm just buying cryptocurrencies and doing some trading in options. Okay, so gold up a little bit. We'll see when it reaches that all-time high here. But year to date, it's up about 26.5%. And here's silver, of course, up almost 50% year to date, and also heading up again after that little dive off a cliff there the last couple of days. So we'll continue to see if it shows a strong promise. I'm sure it will be. as more and more diabolical news comes out about the feds and how they're trying to erode the wealth of the common man, we'll continue to see how gold and silver will do, and my suspicion is they will continue to do well. Let's take a look at the cryptocurrency market. All right, so up about 0.5%, 24 hours, a $362 billion market cap, 58.96 coins, up a little bit too. Okay, Bitcoin still down somewhat. Ethereum a little bit up. XRP down substantially, really. Chainlink continues to defy gravity. That'll eventually come down to earth. Bitcoin, Litecoin, they're all down. Most of it red across the board, as you can see. Stellar sort of mirroring what XRP was doing, down 2.9%, almost 3%, and this is down 8.6% compared to Stellar's 8.5 in 7 days. Interesting. And some coins up a little bit, but nothing really showing great motivation just yet, except for Chainlink. But I'm certainly not going to be chasing waterfalls, as they say. All right, and on to the online oracle, the 8-ball economist, for today's most pressing question. Okay, and so as you know, when we took a look here, we saw that the U.S. weekly jobless claims were under 1 million, slightly. So we'll take a look and see. I thought that would be a good question for the Magic 8-ball. Will next week's new unemployment claims break 1 million? I think it will. Let's see what the 8-ball says. Yes, okay, that's a very clear, succinct answer. So there you have it, folks. This online oracle, 8-ball economist, seems to think we will have more than $1 million 1 million new unemployment claims next week, so we'll see how that goes. We'll keep an eye on that. In fact, those will be one of the numbers we'll be watching, along with the monthly results, on probably a go-forward basis, probably into spring, I would imagine, spring or summer, which is maybe when we'll hit this real low, I think perhaps the final nadir point. So there you have it. Thanks so much for joining me. I really appreciate you, and thanks for spending the time. I appreciate your comments down below. And in the meantime, I think that, continue to hunker down, put away some savings, pay down debt best we can. And if you're employed, really make use of savings you can squirrel away. And if you're unemployed, then hopefully you'll get some of these extra benefits soon. And my heart goes out to you guys. But remember, in the meantime, dum spiro, spero.